Hello everyone. Welcome to the first educational of the year. We're going to talk about breakers, breaker blocks, and obviously some Model 2 action probably because that fits well with the breaker. So let's get a random date and let's get into the um, simulator so we can actually apply what we are talking about instead of sending a PDF, right? 13 December, not really a date I want to trade, so let's pick another one. 23rd of March 2020. That's like Corona outbreak, I think. So that's gonna be interesting. All right. So what did it say? 20th of March, 23rd March, 23rd March, March 23rd. All right. Let's do AUD USD for once. Let's do no spread just for simulation's sake. And let's open up these charts. Now all the way from monthly down to the 5 minute because I don't want to watch the 1 minute. I feel like the 1 minute is giving off a lot of signals which can be confusing. So sticking with 5 minute is better in my opinion, as we are trading the day trader. So if you're a scalper, obviously go with the 1 minute. And for tape reading purposes, 1 minute is also very good. But yeah, I think it's better to watch 5 minute break of structure, etc. Load up these charts. You can always skip a little bit ahead. So while I load up these charts, let's put some indicators on it. And if you're new and you're watching this one, we always do Asia range, day of week, and ADR. So we know if the ADR is above 80% during after London session, probably New York's going to be consolidating. So let's go all the way to the monthly. Let's see if my is it properly set up. Yes, it's properly set up. All right. So yeah, this is Corona. Definitely Corona. All right, so that's gonna be we cannot really work with the monthly over here. Okay, so let's look at the weekly. It's probably the lowest it has ever been. All right, so we cannot work with the weekly either. Um, yeah, this one is gonna be tough. Daily. All right, so this is the first week of Corona. I have to sneeze. Sorry. First week of Corona. Looks like we dropped like almost 1,000 pips from here. That's a lot. So this is pretty low. We're probably gonna see a bounce a little up to into premium from these levels. So yeah, let's see. We always skip Monday, so let's skip Monday. All right. So we've got some swing low action down here. We might reach into this fair value gap up here. So this is our initial draw, right? Because we're very deep discount on all time frames. So let me outline this fair value gap. Make it. Wow, that's super dark. Yes, that's better. Lavender. All right. So our daily bias right now, bullish, right? We want to reach into this one, which is 200 something pips away. That's a good range. Now, let's see if we can grab an entry somewhere and specifically waiting for a breaker to form. Now on the 4 hour, we just recently tapped into this 4 hour fair value gap. That's why we're bouncing down. We're failing to take out this low. Unfortunate thing about simulator, I cannot see if there's SMT on these lows, right? So that's fine. That makes it a little bit harder. And on the other side, it makes it easier because psychology on a simulator is not really present because you can hold. There's no risk. So yeah, it looks like we're forming a failure swing down here. And then this order block is holding on to price. So let me outline this one. And why is this an order block? because we displaced over here. We're leaving momentum up. So plus OB. It always does it on the left, so that's a little bit annoying. Let me do it like this. Right, so this is the order block which is holding price right now. Let's go to a lower time frame. Yeah, definitely we want to go up. Zoom out a little bit. Yeah, and also utilize market maker models, right? So let's zoom out a little bit. We've got this nice consolidation over here. Let's make it green so we know that's the original consolidation. Right, so we have original consolidation over here, market maker buy model. Right, sell side of the curve, reaccumulation or redistribution rather, another displacement lower, smart money reversal, expansion up, breaking structure over here, back into OTE, rebalancing this old gap, right? So this is important to note. This gap has been rebalanced. Not redelivered, because redelivery means there's a fair value gap and we dip into it and move away. We are redelivering price in an opposing PD array. So this is an opposing PD array, it's a barriers one, and we're going back into it once again once we traded through it, and then once we go back into it, it is rebalanced, right? So this has been rebalanced, confirming buy side of the curve, another buy side liquidity rate, back into discount of this range, this current dealing range, and now it is Monday was a consolidation. Let's see, what do we have here? Zooming in a little bit, we have this fair value gap, right? So I don't expect price to go much deeper than this fair value gap, as we already redelivered this and we're moving away from it. Right, so let's go to pre-London, New York midnight. Right, so this is New York midnight. Right, so we do move up right now. Asia session, is it properly set up? Let me check it. 3 to 7. Should be 4 to 8 because of the time zone. Because right now here we're at 8 o'clock, it's 3 hours before London Open, which is New York Open, New York midnight. Right, and Asia range is from 8 p.m. till midnight, that's 4 hours. So this is the accurate Asia range. Right, so if you want to be a buyer, you want to ideally buy below daily opening price. So I'm outlining daily opening price right here. This is New York midnight, right? Let me copy it. And this one too. So we want to be a buyer below this line. So I can see one fair value gap here, one fair value gap there. So we have two potential POIs. I prefer this one to get hit because this one is lower and deeper in discount opposed to this one. We would take out Asia low, which is good. You're looking for 20 to 30 pips below daily opening, ideally. So it's actually in this gap already. This is 50 pips down, so that might be a little bit too much. Right. No, we're gonna wait. Let's go to the 5-minute. Let me outline this gap, by the way. This is gap number 1. Let's make it gray. And gap number 2 over here. Right, so we have two POIs. Let's see how structure forms in this one on the 5-minute. Then we're gonna see if we can find a breaker. Right, so I need to copy those so we don't see them. Clone update. Right. Now we move. This is the first POI, right? So here is an initial where we can have an initial buy. We're looking for breakers. So if we disrespect this bearish fair value gap and start to break above these 3 up close candles, which becomes a breaker, and why does this become a breaker? Because we are taking out this sell side liquidity, and then if we break structure upwards, then this becomes a breaker block. Right, so we're breaking above, that's good. We have displacement too. Breaking structure on the 5-2. Excuse me. Right, so we have 15-minute fair value gap over here. If it closes, let me see. We're pre-London open, so there can still be a manipulation. So I think it's riskier to enter before London open, but you can still do it. Right, so this is the closure. Now let's put a limit in here. It's 25 pips away, so we might not even get an entry. We might have to go with this breaker and then take this fair value gap down here, which is 18 pips away. So let's put a limit in, 18 pips away. Let's put it below the structural low, which is 17 pips away. And our higher time frame target is all the way up here. It's pretty far away. 100 pips, that's good. 4 hour we dipped into this fair value gap. It's also nice to see. 1 hour is rejecting nicely. So yeah, now it's just waiting and entering. Buy limit. Oh, it's a little bit high. Like this in the gap. Right, so let's see what price action does. Alright, so we're already liquidating this high. Might not come back. It's pretty bullish right now. Let's see if it comes back. Almost London open. Now we are, yes, almost. Now it's London open. Let's see if we can drop a little bit. Alright, so it looks like we don't want to go because we did 1, 2, 3 drives lower, and now we're displacing up higher. This unfortunately is not a breaker because we did not take out this sell side liquidity. However, this is a breaker. So if we break above this, then we can potentially try to enter. This is a 15 minute. If there's a fair value gap on the 15, that's also good. This was a nice entry, but no breaker because the breaker is over here. And we're focusing on breakers on this session. Now it's London lunch, so there's no time for entry. This limit can stay. Alright, we're tapped in. It went almost into the stop loss. Alright, we're taking out. So this is with New York open. That's fine. It's just simulation. We have another POI, which is this one. So let's see how structure forms once we dip into this one. Right, we dipped into it. 5-minute structure break right now. Right, displacement. Right, so we have a propulsion block over here because it's sitting on top of this order block. Right, we're disrespecting this fair value gap. So if you're a late if you have a late entry, you can also enter right now with a 17 pip stop loss because it should not violate this order block here. We're already respecting this one and disrespecting here, so this is balanced. So putting a stop loss down here should never get hit. So let's do a market execution. Oh, I did like 0.01% just with the last one. Oops. Alright, let's buy. So this looks like a late entry, but it should still be good. And we're working with pretty good momentum. Right. Now, when we take out this high, it's time to go break even because we're taking buy side liquidity. Right, let's skip ahead a little bit. Right, so we take buy side liquidity. We're up over 1%. We tapped into this propulsion block once again, and now we're sitting on this breaker. So let me outline this breaker. Right, so price should not exceed anymore because we're above the breaker. We're accumulating on top of the breaker, right? So let's go break even. 50-minute, excuse me, is not leaving a fair value gap behind. So model 2 is not possible over here. However, there's another potential breaker up here because we took out this sell side liquidity. So these two up close candles become the breaker. So there's another opportunity to get in over there. Let's see what the daily candle looks like. Also important to keep note of. Yeah, it almost took out this high. So we still have that target. Oh, we need to modify our TP a little bit higher into this one. Let's go for the midway point. So that's the consequent encroachment of that fair value gap. Right. Let's go back to the 5. Let's roll the tape. See how it's holding this breaker. It should. More accumulation. And now we're moving away once again. Right, so we're almost at the buy side liquidity over here. So we're up 3.2%. Now it's time to take a partial. 1 to 3. Always take a partial at 1 to 3. I don't care whatever you're doing. 1 to 3 is very, very good. So let's take off 60%. And then we have a 40% runner. So now we banked. Let's see, we banked about 2%. So with the other one was a loss, obviously, this one, but I had a low risk size. I forgot to put 1%. So in reality, we're up 1 point something percent. So that's still good for the day. Let's see how this will react. This is also a breaker once we trade above it. Oh, that's so heavy, this color. Okay, let's make it. Yeah, that's better. Right, so let's roll the tape. See, that's why you take a partial. It just retraced like 40 pips down. That's very bad for psychology, I will tell you. If you see that position being up almost 60 plus pips and then let it go back to 20 plus, no, that's not for me. Alright, back to daily opening price. Very deep down again. Right, so very good that we took a partial. Look at all these highs we're leaving intact, right? Where are we? It's all late in the day, so it's almost at a new day. So let's go to the next day and see if we can catch another entry. Right, this is the new day. Let's see how the daily time frame looks like. Right, a big bullish candle. So we already had a pretty big expansion. So this day we could potentially wick into that fair value gap, and then it probably is gonna be a little bit still. So let's see how this looks. So I would already classify this day as lower probable, as we are hitting this, or highly likely to hit this fair value gap. We can also see we are clearing that market maker buy model, right? Then we could see a retracement lower. So we gotta be aware of that. Right, so let's see if we can get something over here. Let's go to New York midnight. Wow, this candle is 30 pips big. Let's see what the news is, if there is any news. President Trump speaks. Oh Lord. Yeah, that always calls for a lot of movement. Right, so no high impact news today. Fed Chair Powell speaks. That's also something high impact. Unemployment claim. So this Thursday should be a volatile day as well. Right, so this is kind of unfavorable because we already had a big expansion even before um, London Open or even before New York midnight. So this is still in Asia, the last candle of Asia. Right, daily open. Okay, let's see how. Let's skip to London Open. Alright, so we already hit the target. So from initially our bias was going into this fair value gap, so now we have to kind of have to wait. Right, maybe we can even catch a retracement lower. Right, let's go to the 5. This is London Open. Let's see what London Open does. Leaving relative equal lows right now. Also kind of relative equal highs, but we do form a failure swing here, so it might be prone to go lower because we're trading above daily open, remember? So above daily open, it's higher likely to find a sell setup. One more rate of the highs. Right, so we feel almost redeliver fully into this daily fair value gap. Right, so London is almost done. Look, now we're breaking lower, right? Let's see the 15-minute. There's relative equal lows down here. We have a fair value gap left behind. If this candle closes. Yes. So model 2, 5-minute structure shift. It's kind of messy. It looks like a trend line too. So that's kind of gotta be careful about that one. But 5-minute structure break because we're taking out these lows, right? And model 2 is going with order flow, which is currently bullish, so it would be a little bit more risky. But we have a 5-minute structure shift. We have relative equal lows. If we zoom out, we've got again market maker, short-term market maker sell model, right? Because we have this original consolidation, expansion, reaccumulation, expansion, smart money reversal in a higher time frame POI. Now we're breaking structure down here too and leaving a 15-minute fair value gap. So model 2, if we enter, that's 2-3 pips away. Then we should put our stop loss above. I think this should be enough. 20 pips should be enough. Yes, and what does the daily look like? Oh, we also have a... What do we have? This pretty big gap over here. This day has not closed yet, but this gap is pretty... Only buy side was offered on the daily here, so we might retrace back into it. And we already completed the market maker buy model here, so we can have a short-term market maker sell model. That looks probable. So this is fractal. How much are we aiming for? 70 pips. Yeah, that should be a good setup. And then we can see if we can scale into a breaker, which would be this black candle here. This would be a breaker. Right, so let's take this 15-minute fair value gap, model 2. 75, sell limit. Alright, let's roll the tape. See if we can get swooped. Or do we have a breakaway gap? No, looks like we have a breakaway gap. Oh, unfortunate. That's very unfortunate. I'm seeing if there's something we have another 15-minute fair value gap being left behind. So this is a breakaway gap right now because price has already been balanced, looks like. So let's remove the other limit. There's another opportunity in this fair value gap. We already tapped into it. So if we take premium and discount, we start from this swing high to this swing low. Now we want to be in premium levels, which is above the equilibrium. So that's above here. So let's put a limit on the breaker. Again, this is the breaker, right? So as soon as we touch the breaker over here, we go in. So that's 11 pips away. Where we're going to put our stop loss above this breaker block, which is 22 pips. And then we're going to aim for the market maker sell model has not been completed yet. So there's still opportunity to go lower, right? Yeah, that should be good. Okay, sell limit. Let's see what this does. Let's see if we can get taken. Well, only want to sell it in premium, right? So right now we're in discount. We can still move away from here, but I would prefer us to go into premium before we move it lower. Let's skip ahead a little bit. Right, we're tapped in. This is also, I think, 50% of the fair value gap. So if I take this fair value gap, a little bit higher than 50%, I think. Yes, a little bit above 50% of this gap, but it should still be good. As long as the bodies are closing below or below the midway point of this gap, it should still be good. Right, so New York session right now. It's kind of, because we're already at big displacement before New York session, we might consolidate a little bit. What does the daily candle look like? Still trading below that daily fair value gap. 4 hour was bearish, previous one. 1 hour. Yeah, it's slow. And look at this. Look at this breaker. Let me outline this breaker over here. So as long as we're holding the breaker, it should be all good. Now we need to be patient. Patience, patience. Oh, this is not a good color. Right, so this is the breaker. Right, so we should not exceed it. That's why the stop loss is above the breaker. Actually pretty good entry because we only had 4 pips of drawdown. If you want to be real tight, you could put your stop loss just at the top of the breaker, but I like to use this structural high of this breaker where the breaker formed. Right, almost clearing this original consolidation. Moving down, 2.5% up. Yeah, so we cleared this consolidation, so now it's time for a partial. Always partial, guys. Close a partial. Let's do 70% this time before we get taken out again. So 70% off. Let's look at the daily. Daily might even go a little bit deeper. So yeah, let's just keep it like this. It's fine. We already took out the consolidation, right? So maybe put it on this swing low. Right, so click, 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 click. Let's see where we go. Can we take out the, and we hit the target. And we're tracing up right now. Right, so we are almost 30 minutes in right now, so let's wrap it up over here. Hope you found it interesting how we look at the breakers, right? So higher time frame PY being hit is very important, and we need to be above daily open too, in my opinion. If you're looking for a sell, now you're waiting for a higher time frame POI to get hit, right? So daily fair value gap, break of structure on the 5 minute, We tried to take model 2, but this was a breakaway gap, unfortunately, otherwise we had a very, very good entry. Then look for another opportunity in the form of a breaker. We have this wick hitting, this is also a breaker on the 15, right? And on the 5 it's even, you can see it even better, right? So break of structure on the 5. Market maker models, also very important to look at, guys. So you know if you're on the buy side or the sell side of the curve. Identify the original consolidation, which is over here. Break of structure, back into the breaker block. There was a fair value gap, so breaker block and fair value gap combined together. Very powerful combination, and then be patient. Don't move your stop loss unless you're taking out some sort of sell side liquidity. Right, so we're moving away 20 pips here, but it can still come back again, you know, because we did not take any sell side liquidity. So breaker block holding strong, target has been hit. And yeah, I hope you like this first educational, guys. If you have questions, as always, message me, and I hope you have a great weekend.